Thank you for the opportunity to talk here today. Some of us yesterday over wine had a discussion about macroprudential policy and how young it is. You could say it was sort of born in a storm or born in the aftermath of a storm. It may have left the cradle, but we're still in the very early stages, I think, compared to other policy areas in terms of understanding where we're going, what are the instruments, how to use them, and so forth. I'll be getting back to this point. Let's see if I can get this to work. No? Yes? Yes. Just to give you a little bit first on the macroprudential regime in Denmark. The Systemic Risk Council was established in 2013, has 10 members. It is chaired by the governor of the central bank, and one of the other governors is also a member. 2 from the FSA, 3 from the economic ministries, and 3 independent members. So the basic tools of the council is observations. This is where it's sort of an observation is not really addressed to anybody. It's an observation on risk being built up. So that is sort of the weakest instrument. Then there would be a warning. That would be sort of a general warning. The most powerful instrument, and that is the one that we have just used, is a recommendation. That would be a concrete proposal addressed to either the government, if it's law, or to the Danish Financial Supervisory Authority. But mind you, it is a Minister of Business who is a designated macroprudential authority, so that also means that it is within the realm of the politicians to decide whether action is taken or not. So this is a sort of a comply or explain mechanism. If the government decides not to follow the recommendation of the council, it'll have to explain, and then the council will evaluate that explanation. Little bit about, probably goes without saying, but housing also in our case is important. Here you have sort of the price increases, and you also have economic downturn, that is the shaded areas, measured by the production gap. Perhaps the relation is not all that great, but you can certainly see in the uprun to the financial crisis, there was a huge increase in house prices, followed by as everybody knows, by a significant downturn. You can also see in the previous downturn, there's also sort of a tendency to build up of house prices. And I think it's been mentioned before. Some of you have been so kind to point out that debt ratios in Denmark are very high. Household debt, mortgage debt is very high. So on the gross side, it's about 120% of GDP. So this was just to tell you this is important. So what has happened in recent years? Here you see first of all the household mortgage debt broken down on regions. The blue line is Copenhagen area, and then you have the rest of Zealand and the rest of the country. Followed on the right-hand side by house prices. It's pretty evident that Copenhagen is a different story than the rest of the country. We can get back to sort of the discussion as to whether we are concerned about house prices or not, or whether we target house prices or not. But let me give you a clue already now. We're not really concerned about house prices per se, but we're concerned about the following increase in debt, which is going to make households more vulnerable. Sort of a little technicality. Part of the increase in mortgage debt has to do with the Danish mortgage debt system or mortgage financing system is pretty efficient, and it'll probably offer consumers the cheapest loans compared to bank loans. So households that have the possibility, that have excess borrowing capacity in their house, have been to some extent shifting away from bank debt into mortgage debt. So that explains a little bit of it, but not very much. Right. This is, I'm not on LSD, but you may think so when you look at this. This is what we would call a heat map. For each indicator, we have done the distribution over that period of time that you can see. And so this is basically a distribution of each indicator, and the green is an observation of that indicator in that particular time. Below the median, yellow is between the median and 75% percentile. Orange is 75 to 90% percentile, and red is about the 90% percentile. Now, is this science? No, it's not, but it's a convenient and perhaps intuitive way of looking at what is going on. If we go into the period prior to the financial crisis, sort of in the little more to the right than in the middle, you can see everything was flashing red, basically. And it was flashing red not just in Copenhagen, it was also flashing red in the entire country. Now, if you look at this indicator now, you can see that to some extent the colors in Copenhagen are similar to the pattern we saw just before everything turned red. So the good question is, if we move a little bit further, does that mean that Copenhagen will be flashing red? But obviously it's a tricky measure. To some extent it'll probably underestimate the real risk because, as I said, it's a distribution. So that means that there will be a certain amount of green and a certain amount of red and a certain amount of orange and a certain amount of yellow. And if you do this over a period where you have a very severe crisis, that means that period will attract, so to speak, all the reds. But nevertheless, I think it's certainly a tool that we find useful. Another interesting thing, perhaps, about Copenhagen, now that we talk about prices, you can see the one that shows, probably, I think it's real difficult to see, but I think it's the first indicator under Copenhagen. It's not really, it's green. So house price increases in this measurement would be green. Dirk, I'm doing on time. I can see you're starting to. Good, thank you. So, what recommendation has the Danish Systemic Risk Council issued? Well, they've come out with a recommendation that 15% of the flow, that is the new residential mortgage lending, where there's a limit on that, where borrowers' DTI exceeds 400%. Now, this applies only to Copenhagen and Aarhus, which is the second largest city in Copenhagen. We don't have so good data as we do for Copenhagen, but it applies to Copenhagen and the second largest city in the country. It does not include the mortgage lending that have 30 years fixed rate annuities. And as I said, the government will have to comply or explain. I don't know what they're going to decide. They are still thinking about it, but I expect that we will see. There's a 3-month gap, so to speak, for the government to return. The main concerns, as I said, was the prices and the lending growth to households that will make them less resilient. What was the last point? The last point is here, which is, now you probably wonder, is this biting or is it not biting? How tough is this? This chart will show you sort of the green was where DTI is below 400. The blue is the type of lending that has been excluded, that is to say the fixed rate. So the red is sort of the risky loans that we're trying to get at. In 2015, in Copenhagen and Aarhus, lending, if we had had that measure at that time, you can see that some 27% of the new flow of loans would have been in that category. That means if we'd put in the 15% portfolio ceiling, you'd have some 12% that would not have been able to take place. But some of you, probably most of you, have data problems. So do we. This is, as you see, 2015. That's because the latest income figures that we have is 2015. And the income figures we have are actual income. That's, of course, to some extent good, but it's not really good enough because when a bank is giving out a loan, it may be concerned with your actual income, but it is probably more concerned with your permanent future income. And that also means that people in 2015 that just had a new job, had a pay raise, or even more at sort of at the corner of things, would be you have two young academics coming out, a couple moving into Copenhagen. Have they any income in 2015? Probably not. But if they just had a job, got a job, that means that their income in 2017, 16, and so forth would be significantly higher. So that is a problem. We tried to look into it, and the essence of this is that it probably overestimates the how much it bites. I think if we sort of try to look into what it would have been 16 and so forth, it is more likely that, or we estimate that some 8% would be deducted. So in the neighborhood of 5, 6, 7% is probably the sort of the bite of this measure. Is that going to keep house prices from rising? Presumably not. Again, is it going to make households more resilient? I certainly hope so. That would be at least the direction. And there's also the importance of sending a signal, which may in itself have beneficial side effects. And something perhaps we can get back to that in the discussion session, because one thing I think that is really haunting this whole science of macroprudential policy is inaction bias, or in the time it takes to make decisions. To illustrate this, 2015 first quarter, the Systemic Risk Council issued, as you remember, an observation, so that was the first step on this. Then we had the IMF visiting, and we had the ESRB, and so forth. And now we are 2017. Maybe there's something on the table that is decided in the third quarter, implemented when. So maybe it's not an action bias, but it's certainly a significant time lag from when you start seeing a problem until you can have something on the table. Concluding is conducting macroprudential policy difficult in practice. Is the current and future state of the housing market uncertain? Our tools less than perfect? Yes. I think Erland yesterday on whether they should address prices with no and a no but. I also have a but. It's a yes but. Coming back to the inaction bias and the less than perfect world, I try to illustrate that with a little picture on the right. I think we're sitting in a car. We're hopefully at the steering wheel. We're driving around a road. It is a difficult road. It's foggy. It's probably more foggy than on this picture here. And the only thing we can see clear is what we see in the rearview mirror. Thank you.